children of planet Earth. Hello from the children of planet Earth, Hello from the children of planet
What's up, everybody? Good morning. Let's get ready to get trading. S&P lower DD band already. Caution for the day. You know, the monthly maps yesterday hinted at this. Nothing at all was a surprise. We're roping up futures trading down. All right, let's get ready to get moving. Everybody smash the like button while you're waiting here. Get ready to get rolling here. What up, friends? What up? What up? What up? We already know how this works. CD band lower limit tapped. S&P, Nasdaq, both of them are there. Anything I do, small if anything at all, right? Already know that for the day starts. What's up? All right. Friends, hit that like button real quick. We'll get our analysis going in 2 minutes. Get those likes up on the stream. Let's go. Everybody. We'll get going. We get that ratio up. You know how it goes. Or get up some 1 minute, everybody. JOLTS coming out 30 minutes. It's going to be a big read on the market today. We probably wait till that before I do anything. Okay, JOLTS in 30 minutes. Gonna do nothing until then. Let's just watch what we have. Res coming in. I'm gonna give it a couple of minutes just to see what it does. Close to 40, 20 on Nasdaq. Nasdaq is probably the one that's traded the lowest. We're popping inside of DE bands. We're good. Should I trade through the box here? 2.5. That's actually not bad to trade open the top. I don't know if let me see if I get anything off of this. Ah, there we go. Okay. Ooh. Resilience can hint at hedge pressure break. Ooh. All right, let's double check this. It's a pretty interesting setup. Oh, man, do I want to take that gamble? Oops. Let me just set up here. I used to do the... All right, how's Raz doing? We're close. We're still above zero. Irrational. Take a small position if I did anything at all. What do we think on the JOLTS, guys? It's like, do I take a stab? I'm watching this. It doesn't look too terribly bad. Hit that 4,300. Let me get a red candle and I'll load up. I want to see resilience, predict hedge pressure break. That's all I'm looking for. Better giant mean reversion, like right in the middle. It's not even the most fun. Oh, let's see. Yeah, that res is negative. Good. I'm gonna hold out. Glad I waited on this one. Pardon me. Sorry for coughing in your ear there. No, I don't like it. So resilience negative. Inside of here, it's resistance. I'm not a big fan of that. I'm gonna let JOLTS come out and make a decision there. Resistance 0. Like that. Res greater than 0 would be a very violent day. Plus the DD ratio is still bullish. We would expect that tapped in there. Here, we're going to wait on this one. Monthly maps just looking crazy, y'all. What's up, y'all? What up, friends? Smash that like button on the stream real quick. Monthly maps just like this. It is looking crazy. Okay, so this is bearish for the week. Okay, let me pull up the cheat sheets. If you go into the Discord, by the way, we're running a special. We're doing $500 off the lifetime platform access, so you don't have to do monthly subscription if you'd like to check that out before our lifetime prices go up to $4,000. It's now going to make it $2,500. So if you guys want lifetime license, check it out today. We have that little deal going on for everybody. Cheat sheet. Let's pull this up. You can access to our platform, all future things that come out. All access to all things forever and ever and ever. Okay, this right here. This is really scary. Bulls exiting positions. That's what we've been seeing, and that's representing, and that goes into the future, right? So that goes all the way through October. Your resilience just bouncing around. I'm not going to take anything right here. This is not giving me a clear signal. Bull selling. I mean, it's just not really the best setup. Back to the daily mode. Take a look at this. Jesus, it would make sense to buy weekly puts. So I can give you trading advice answering a question like that. Because we are selling in a bull market, see, this is still bullish-ish on the stocks. It's so crazy. DD number is still high enough. So trickling down in a bull market. I'm not shorting puts. I'm not buying puts. If I were to buy puts on a day trade, anytime I buy puts, it's always short-lived on day trade. If market hits right there, or we're up here and res is less than 0, I'll buy directional puts, like maybe that strike right there, just to take a trade for like weeklies. But like betting that the market falls for the week with puts is something I never do. Because if you count the candles on daily charts, markets go up and down differently. When markets are trading down, there's still a green candle for every red candle. So as a rule of thumb, however long you think it takes to go from point A to point B in a short, you probably should triple how much time you think it's going to take to get there, because markets always fall like this. So directional puts are kind of harder to gauge timing on. I personally don't do it. I personally, if I think the market's going to trade down and like zigzag down like it's going to, I just look for long ops still along the way. Like I wake up today and go, is there a long op here? Possibly. Maybe. And then I take long scalps along the way. It's easier to long scalp a selling market under the right conditions than it is to actually short a selling market. But just because I think markets are if it's a bear market that's different below DDM or below monthly hedge pressure, then of course I do directional puts in general. But see, we're still selling in a bull market. It's still bullish from down in there. It's just a larger dip. Right. So for me, my brain is just like, I'm going to let it trickle down, and maybe next month or the month after it's going to turn around and come up. We're still stuck in bull territory. It's just selling off. That's the way I look at it. I only buy directional puts if I'm really convinced it's like going to collapse with high volatility. Like I need VIX to be doing something. Or VIX 17, the market's not going to just fall like a stone in a pond, right? So volatility is going to be your measurement of how thin the market's going to be in volatile. So if VIX was 20, 30, 40, then you're going to have days where it hits hedge pressure and then it just, tanks. Those are days I'll like to buy directional puts. So here's what we're going to have today. This is if res greater than 0. We'll have a hedge pressure break. We'll predict that one. Res less than 0. It's resistance from there. Resistance from there. This is my trade setups today. After JOLTS pops, I'll analyze resilience. It's a possible short setup from there. I actually may take it. We'll see. Get that hedge pressure and then maybe trade down. Really good setup. But yeah, I can't give you investment advice in general. That's just my personal take on buying directional puts. More likely, the style of trading I like to do when I think markets are going to go down but not up, but choppy down and not crash, because puts are going to pay out really well when you get that volatility building in that premium, right? Volatility crunching, your premium is going to be like lower. You're not going to have a great of a gain. So if you don't have a non-volatile sell-off, which we're experiencing now, what I like to do is I like to be in the sell side of options. So I want to sell calls, buy calls, call credit spread. Okay. I'd sell calls above hedge pressure to bet that we don't break it. I'd buy calls in the bull zone just in case it catalyst kicks us forward and keep going. And I'd structure it up in here. So to bet that the market isn't going to rally, but not care what it does. Flat, choppy, whatever. Ooh. Let's do that. Browser in our memory. Let's try that again. Oops. You're gonna wait for JOLTS and then do something. Everybody smash that like button while we're chilling. All right. Are you guys doing anything today, or just kind of sitting on your hands, waiting? What's the status? No, I'm not going to analyze anything until I'm going to analyze any trade setups until JOLTS come out. You're just sitting on, okay. out here. He said, this is one of those. Kind of not exactly actionable tradable today. I mean, resilience just floated at 0, and then it just randomly popped to go to the middle. Now the question is, what do we do from here? Obviously, I'm not trading much anyway, so we hit the lower DD band. So even if I was trading, I'd be trading really small. That's originally the long I was thinking about taking, and then I just kind of scared myself out of it. Didn't like what I saw. We're gonna wait for JOLTS to come out and then maybe take action from there and see what we get. Chill until JOLTS, yeah, same thing. But that was pretty quick move to half gap and hedge pressure, so there's that little resistance there. Rest stays positive can forecast a hedge pressure break. That is the next step. So this could just be a sit out day with no action. And honestly, I feel like I don't want to take any gambles. Control is everything. And a small account challenge. Usually the ones I sit out, I think have pretty good reasons to. I wasn't super convinced it was gonna pop. I bet on it. I mean, I didn't bet on it. But I was anticipating it to just not be actionable. And resilience was that one. So today was one that we didn't get a good signal on that, so I didn't take it, which is good. Sitting out is a loss of 0. This wasn't easy to read as it just chopped around. So the JOLTS say in about 9 minutes, and we'll move from there. Today's your birthday. Happy birthday! And the day usually crashed on your birthday like the last 3 years in a row. All right, I'm gonna buy some puts then. Let's go. We're gonna wait for JOLTS and then kind of move on that. Keep an eye out as well. Any upside today will be limited by interruption here. So watch for VIX. Bulls and bottom. All right. Yeah, so we're pulling back a little bit. Let's talk about the JOLTS. Sorry, we got those coming up in 6 minutes. If you guys understand what JOLTS are going to be a little example. Hold on 1 second, guys. How about that, guys? Hold on 1 second. The JOLTS really quick.
Things can look like into the future, so you're not really caught offside on a trade or a swing trade necessarily. So that sounds like something that's interesting to you. Go ahead and give the Rockets.
All right, so JOLTS. Two things are going to look together. And I'll talk in space as well. Adam, it's leading up to JOLTS. Do you mind? Can I do an analysis of JOLTS? Okay, cool. Sorry about that. I dropped off for a second there. My connection gets weird sometimes. So just quickly, sorry to interrupt. Yeah, I want to hear what Diamond has to say as well. So JOLTS basically is a report that comes out once a month, and it is a report that looks at a 30-day window of a job can start. So basically, a company has a job, and they're going to fill it within 30 days, and that there is work available for the position, and there's somebody actively trying to fill the position. So all the bottlenecks of why people aren't getting a job or the job getting filled are removed, and this is a pure look at the activity of jobs being open and filled. So when JOLTS go up or down, one of two things can happen. So JOLTS went down, for instance, over a trend leading up to COVID because companies were eliminating jobs that they were going to fill. So companies go on a hiring spree, the government shuts everything down, and all of a sudden they close all those positions. So JOLTS actually trend down. But the other time JOLTS go down is when the jobs are available and then they get filled with workers. And so when JOLTS are going down, it can be good or bad. So how do you distinguish the two? And the second thing that you want to do with next to that is you want to go to the continuing jobless claims that come out every Thursday. And when those numbers are trending down as well, it means that fewer people are filing for unemployment. If JOLTS are going down while fewer people are filing for unemployment, it means that unemployed people went back to work. And that's what you want to look for as a sign of a hiring spree. And that is actually the environment that we're in right now, is that it's kind of been trending down on both sets of data. And when you look at both sets of data doing that, it's a good sign, because that's really what's bringing wages down. If there's more competitiveness in the job pool, like more people are, okay, the number just came out, I think. And anyways, when there's more competitiveness in the job pool, then people are willing to accept a lower salary to come to work. And so with that lower salary, it's going to bring inflation down, which means the Fed's going to act. So yeah, we are. Market hit that hedge pressure, turnaround, fell off. We've got the 8.8 on a 9.6 forecast. That's actually let me check this really quick. Hold on, that's the wrong number. Wrong numbers. Oh, sorry, 9.6. Yeah. Yeah, so that came in normal. I was looking at the wrong numbers. Market not liking that at all. Oh my God, market's selling. Hit that hedge pressure 426.5, and market turned around and fell off from that. All right. So yeah, so JOLTS came in 9 points. Wow. Okay, so that's actually, on what I've been saying, is actually really bad. That is really bad. So when JOLTS are coming in larger than expected on the forecast, it means that companies are not filling these roles that they need to fill in over the last month. And I wonder if that has a lot to do with people not being so aggressive on expansion. They see the market turning down this last month as well. That's a huge number for the expectation. So not as many people got hired as were expected. If there's more jobs open, that's interesting. Oh no, I was letting everybody rap on it. It's interesting to see how the market responds to the economy and the economy responds to the market. I mean, that's exactly kind of what we're seeing. All right, what's the reason that number came in so high? Why? I know it could be just noise on a single data point. Is it seasonality? Is it fear of a bear market? Right? You're not going to hire somebody if you think the market's going to turn back around again and you need to go back in the slower roll. So what would be the reasoning for a 9.6? That is as high as it's been since July, at least on the number. The forecast was expected to be very low. And, it came in pretty high. So I wonder how everyone missed that in those forecasts. Maybe it's just such a short-term thing. Maybe it's an isolated sector. What do you think?
So JOLTS for me is like these job openings, right? So like I was trying to say earlier, it can be artificially high.
And it could be high if people are creating jobs too.
I see this as job openings, job offers like put out there, and I mean if the economy is hiring more than the last report, then they're doing well. But if the economy is trying to ramp, that means that there's probably more leeway for Powell to raise interest rates in my mind. So
Agreed.
I'm looking at potentially good news is bad news, and we're still back to that bad news is good news kind of scenario. But yeah, just as an aside, and again, I don't put a whole lot of stock into the JOLTS number itself, but it does move the market intraday, obviously.
Well, yeah, 100%, dude. Like, the JOLTS by itself is
As an analyst, like, you know, prognosticate on what this could mean. But yeah, there's the move. Good call on waiting, right?
Yeah. Oh, yeah. The number by itself, because like I said, it can be interpreted two different ways. So you have to put the number with something else to give it some weight. So with JOLTS ticking up and continuing jobless claims also ticking up, it shows a deviation from a hiring spree. So like you said, the other side of the coin is JOLTS going up. Companies are overly optimistic and creating a bunch of jobs that haven't been filled yet. So the other side of the coin is the big uptick in that number could be the tech sector sitting here right now, all opening, thousands of jobs, whatever, per month, just because, they're growing, and it could be an isolated thing in a single sector. So we want to, if those JOLTS are going up, we want to see this Thursday's continuing jobless claims tick down, because with the more available jobs there are, clearly unemployed people should have an easier time finding work. And if that number is not also ticking down and it ticks up again, it is going to show slowdown. So yeah, like you said, JOLTS by itself is a hard read. You have to pair it with something else to see if it's healthy or not. Hey, what's up, Kim?
Yeah, I was going to say, as the market's moving, take a look at the 10-year. See, that's the thing, like, the market needs time to digest these yields going up, and, knowing, okay, this is what the interest rate's going to be, so now businesses know, like, okay, what are they going to borrow? When it keeps moving up like this, I mean, I would say even for myself, if I was looking for a home, or if I was, going to take out some loan that I needed, if I saw interest rates, screaming up like this, I would be taking a step back, right? Like, oh, wait, what happened? Let's take a step back and wait and see. So the move right now is at 4.744. That is a huge move on interest rates, like huge. So I think this in part is really what's shaking the market up too, is these
Yeah. It's good. Nothing good today. I'm glad I set out. You guys, did y'all sit out? Did y'all trade? What did y'all do?
Check out the dollar, yeah. Laughable.
I haven't seen that. It's just nobody has time to look at it, but nobody has to prove it out.
I mean, another high, 107 spot 30.
Yeah. And in the market, like, it needs time to digest it. The banks need time to digest it. The businesses need time to digest it. And there's no, like, time to digest this and make business decisions or forward type decisions. So it paralyzes people essentially, and paralyzes the market, I guess. Better way to say it.
Look at that beautiful head pressure bouncing. You see that? Oh, it's so beautiful. See how I did it? Didn't take the bait, didn't take the long. Nothing looked great today. Such a beautiful. Breaking DD band, sit out day. That's the easy way to call it. What did I say this morning on the stream? That likely going to trade up to there and continue to trade down. That's exactly what I was thinking. That if resilience stayed positive, it could predict head pressure break, but already touched lower DD bands. It's trade small, if anything at all. Let me actually. Oh yeah, sure. Pardon me. I'm still like coming over this cough that I've had for a while. It's like a little tickle in my throat. So the DD band is part of the risk interval suite of indicators, and the risk interval it's a futures thing. And what we do in Rocket Scooter is all of our indications we create are exploits of something that's mechanical in the market. Futures have set margin requirements that the CME group sets for performance bond minimum requirements, which is a fancy word for margin requirements, how much money you need to put in to buy a futures contract. And so since that's fixed and set for everybody, that number is actually calculated by the CME group very meticulously using a program called SPAN. And what SPAN does is it calculates risk of people that are, holding positions in futures, like large institutions, market makers, etc. Long story short, they use the positions of the institutions to set margin requirements. It's a theme with Rocket Scooter, right? All of our exploit something like that. DD band is an exploit of the risk interval, which is an exploit of SPAN. And so when volatility is expected to go up, margin requirements in futures go up. When volatility is expected to go down, margin requirements go down. So they actually, it's a feedback, right? They listen to the market and then adjust the margin requirements accordingly. So what we look at is the risk interval is an exploit of a risk-based move in futures that deviates from the market it's tracking. So for instance, S&P futures tracks SPX. And so if futures are trading down overnight, for instance, when our market's not even closed, it doesn't make any sense because it's supposed to be tracking our market. Well, it's stretching away from where nothing is because our market's technically not open. So in the overnight scenario, if you move one risk interval, again, this all has to do with futures and SPAN. So I don't even think like what it's actually meaning, but if you move that one risk interval down or up from the close of the previous day, we call it a DD band. And what that actually does is the market becomes unstable the minute it stretches that far. Two things that are supposed to track each other. Think of them like being attached with a rubber band, and they can stretch away and snap back and stretch away and snap back. But when you break that band, it's like breaking the rubber band. You stretch too far, the band snaps, and they're going to run really rapidly all over the place to try to catch up. And it creates volatile, turbulent markets. So this morning, because there was that band break before market opened, it had to do with abnormal volatility. If you want to boil it down to what it means, there's going to be abnormal volatility in the futures market just because it deviated so far from what it was supposed to be doing. It passed those risk levels that the CME group looks for. And so you see how quickly we responded to JOLTS. The market literally dropped like a rock in a pond. Y'all all see that, right? And that is that implied volatility that when you've stretched too far. And my very first thing when I opened my stream this morning was the market's going to be very choppy and very volatile just because we just inched up against that band this morning and broke it. Because that rubber band is broken. It's very sensitive to news when you have those breaks. One of the greatest indicators we have, it tells me to sit out. Like right now, I'm not making any trades because I don't want to trade when the S&P and the futures that are tracking are dislodged from each other and they're kind of flying all over the place, right? If you imagine like you go to like a water hose on the ground, you turn it on full blast, and water hose is like flopping around like a snake. That's kind of the situation you're in outside of the band. It's unpredictable. It's random. One thing's going to move and the other thing's going to move really quickly to chase it, and it's going to shoot all over the place. And it's a very predictable chaos, if you want to say that. So it's easy for me to make a decision not to trade outside the bands, long story short. And every futures contract has the same mechanic. We have this calculated for all of them. If they trade too far beyond that expected risk level, the rubber band's considered snap. So love that. Like that. Easy peasy. There's your DD band right here. Predictable high volume pivots. Alan Gross says Rocket Scooter pattern recognition over time. I know, right? Don't you feel like the longer we do this, the easier it gets to just anecdotally remember certain days, right? Like, oh, it's trying to hit head structure and sell off on JOLTS. You just get that. You kind of see like the market moves very predetermined sometimes. Well, we've seen continuing jobless claims go up and JOLTS go up. That's not good. Continuing jobless claims. And JOLTS go up. Now, companies are creating jobs and people are not getting jobs. That is, so imagine like companies are creating jobs and people are still unemployed and not filling them. It means the job isn't adequate for the worker to go in. With an abundance of jobs, you think people would come down. So one of the blocks of that is that the wage is not adequate for the unemployed folk. They want more money and the company doesn't want to pay more. So that would be the discrepancy of why there's more jobs open and people aren't going in. So when you think of those things, it's a sign of possible inflation, and CPI could reflect that, and the Fed reflecting that as well. Easy peasy day. All right, we're gonna call it. Everybody, head over to the Rockseer Discord. We'll do a Zoom call in about 2 hours. We'll do a Zoom call. When you guys all head over to the Discord, we're doing this special right now. No trading day. Gonna sit out. Gonna let it fall. It's easy to see that. You know, why waste my time sitting here staring at paint dry and choppy market? We know it's gonna be crazy and uneventful. There's no reason I'm gonna touch this. The JOLTS and jobless claims are creating a little scary part of the market. The monthly maps showing bulls are gonna be liquidating. That's one thing we said earlier this morning as well. Predicting downside for the week. We pretty much nailed it. Didn't take a trade. Just kind of watched this one and let it go. So anyways, you have a special $35 a month for Rocket Scooter for 3 months for our $200 a month unlocked full package. You guys can check it out. Platform, all the details, all the indicators for you to try out. We'd love to have you. We're doing a $500 off lifetime special for just this week if you want to buy the license for the software forever and all future things that come out with it. No price for you for free. And it's only $2,500. Lifetime price is about to go up, so check that out as well. We love you guys. Happy birthday, Dad Trader. We said every year on his birthday, the market crashes. 4 years in a row. It's a new indicator we're going to put in the platform. Guaranteed. Promise.